All right. Hey there, everybody. Christopher Franks with Texas West Capital coming at you live here a few minutes after 11 a.m. Central Standard Time on Friday, the 6th of January, 2023. The market's first big rally day of the year, right? So I'm coming at you live, guys, from just north of Houston, Texas on Lake Conroe. Hopefully you guys are doing well. It was a good report. The jobs report was out today, and it was good overall, with what we're looking for, right? So if you've been following me, if you're subscribed to the market breakdown, by the way, that is my weekly newsletter there. I think we're going to go twice a week with that pretty soon here. It's at themarketbreakdown.substack.com. You guys can log in there, get it for free, where we talk about what's going on. As I've been mentioning there on Twitter and everywhere else, even here, guys, deceleration is the name of the game right now, right? Everybody talking about pivots, talk about pivots. They should be concentrating on the deceleration. Because here's the thing. If you're talking about pivots, then as long as the pivot hasn't happened yet, you continue to remain in your frame of thought, right? But as a trader, the idea is to get ahead, right? It's to get in before the moves happen. And you can't do that if you're focusing on the result, not on the path, right? And so the path continues to be deceleration. Jobs came out today, jobs report, the NFP, the non-farm rolls payroll report. And so we were expecting an increase of about 200,000 jobs. We actually got 223,000 jobs, right? Job growth. And you say, but why is the market rallying? Well, it's rallying because 223 is still less than, it was 260 or 266,000. I think they revised that down to 256,000 the previous month. So it's still that continued deceleration from that high of almost 800,000 jobs around a year ago, a little bit less than a year ago. So we've continued to decelerate month after month coming through that. And so there's the big part of it. The other part of it is the ADP anticipated 235,000 jobs, I think. And so this came in at 223, even though it was greater than what the other anticipation was. The consensus was it was still less than what ADP expected. So you see there's a lot of things going on here. Now, the other thing is something else I've talked to you guys about, which is what the Fed is watching. Because, you talk about inflation, so you're talking about spending, and they want to see wages come down, right? And so this morning we saw, what did we see here? We had the average hourly earnings year over year. There was a consensus for 5%. It had been 4.8% last month, the previous month, and it actually came in at 4.6%. So it came in lower than the previous one and much lower than what was anticipated. Average weekly hours came in at 34.3. And so it was the consensus was for 34.4, which was the same as what it had previously. So that also dropped. So when the Fed gets this, they go, okay, well, the average weekly hours for December had dropped. The average hourly earnings year over year had a pretty big miss. And not only did it have a big miss, but it came in below the previous month. So these are things it's watching. The average hourly earnings month over month for December came in at 0.3%, which was below the 0.4% it was the previous month as well. So, everything kind of trending down there. No, that's retail sales for Europe. We won't look at that because we're talking about the U.S. here, right? What else did we have specific here? Unemployment rate. Let's see here. It dropped to 3.5%. It was the consensus was for 3.7%. And so previously it had been 3.6%, so it dropped a bit there. But yeah, overall, there's job growth, but the job growth continues to drop off, right? And so, again, this is the idea, guys. If you're traders, I think a lot of y'all need to kind of step back and go, okay, am I a trader or am I an investor? Because, you get all upset that price continues to drop. But if you're a trader, all you care about is volatility because you make money short and you make money long. You just need price to move, right? And a lot of y'all are getting very upset about, for instance, Bitcoin dropping so much and everything. And it doesn't mean you can't be a trader. I think you should be a trader. I think trading's a great thing, but you have to approach it properly. You have to have the right mindset. You have to understand the reality of what it means, right? So, I mean, that's kind of where we're going there. Where did the jobs come in? Most of the jobs, it looks like almost 74.4 thousand came in from healthcare and social assistance. Leisure and hospitality was 67,000. So they say healthcare is recouping the jobs lost during the pandemic, but it's not anywhere near the trend it had prior to that. Construction came in at 28,000 more. Retail came in about 9,000. Manufacturing 8. And then we had information technology, which dropped. They lost 5,000 jobs. That's like, tech, basically. I'm thinking tech dropping there. And then the professional business sectors, of course, down 6% as well, or 6,000 jobs as well. But, again, I think the big thing coming from this is that we have the year-over-year average wage down. And then we've got continued deceleration of the job growth. And so, these are things the Fed's looking at, guys. Everybody says, oh, well, the Fed intends to do what, it's been very clear what it wants to do. The Fed is always very clear about what it wants to do. It rarely ever follows all the way through because it can't. It lags the data. And so, it says, yes, we intend to do this. We intend to do this. And then it gets to the point where data is showing that they can't keep doing that, right? And so then they stop. And they flip and they roll and they go, right? So right now, if we take that into consideration here, we're looking, right now, the target rate probability for the February, end of January, early February meeting, where the rate hike will be discussed, the market's looking at a 76% chance that it's going to be a 25 basis point rate hike. Now, this is up from yesterday, which was 62.6%. As a matter of fact, I think it was even down to 54% at one point. But this is after the jobs data this morning. The market says, yeah, it looks like, because the market, this is what we're talking about, right? The Fed doesn't have the big push to be really aggressive when the deceleration continues, right? They're probably going to hike, but start slowing down that hike because that deceleration of job growth has continued. And the wage growth has continued to drop, right? Or dropped. And it missed pretty good. Again, not only did it miss, but it was below the previous months. So, these are all the things that the Fed kind of takes into consideration, right? And everybody still talks about the CPI, and that's coming out. But, guys, remember, the Fed really is looking at the PCEPI, as I wrote there in the market breakdown a week or two ago. That's the Fed's preferred inflation gauge right there, right? And so, as long as these things continue to drop, which they've been, I mean, why would you be so aggressively, these things are definitely happening and, these other things, right? And you do that because you get very emotionally attached to it, right? You're not paying attention. You're not willing to be wrong. But as a trader, if you're not willing to be wrong, you're going to lose a lot more money, right? Who all's here already? We see Bamboo. What's up, man? Data's here. 51 ETH. Good to see you. Is that, yep, that's Diego there. What's up, man? Fibus Swanee. What's going on, buddy? Man, like I said, guys, I've mentioned before, Fibus Swanee's account there on Twitter got hacked. And so don't follow any of those links to free giveaways and all that other BS. I think you guys are smart enough not to, but I definitely want to, again, put that out there. Musk's Twitter, man, it's taken him forever to get back to him and get his account fixed. So, we'll let you guys know. I'll keep you guys up to date on that as that gets hopefully figured out sooner rather than later. But, yeah, so that's what's going on there. Tell you, Ryder, what's going on, man? Let me see. Who else is here? Nevlusian. Excelsior, good morning. Arrow Quinn, what's up, man? He says, aren't those jobs report mostly fake, manipulated numbers? No. Everybody, there's such a conspiracy mindset that goes through when it comes to government, right? But at the end of the day, things just are what they are. Right? They're not going to go, oh, yeah, just put like fake numbers on there. I mean, that's what everybody thinks, right? Well, I say everybody. Everybody's in that whole conspiratorial mindset, right? That's what they think. It's just in the way that the jobs numbers are collected. It's not necessarily the greatest way. We've talked about it before. And we've talked about, somebody else had a different way of looking at it. Oh, God, that was about a week or about a month or two ago that posted that. So, there's different ways to find these things. The government just says, listen, this is the way we do it. And, for those of you that are more concerned about, about how much you can trust the numbers or whatever. I think the reality is you listen to the numbers because the Fed does what it does based on those numbers. So it doesn't matter whatever's going on with the numbers, right? Let's say it's not the best way to do it. Let's say there's a better way to do it, right? But the Fed is still going to base what it's doing off those numbers. It's like the markets, guys. Y'all get on here and you're like, oh, well, which exchanges volume should I use? Should I use Binance? No, it's probably wash trading, so I should use Coinbase, right? Or whatever, or Bitstamp or Phoenix. But at the end of the day, guys, you use the information in the chart you're on because that's what it's doing there, right? The chart's going to react to that bit of information. You just have to learn how to read it properly. But it's that oh, it's fake stuff, so I need to look elsewhere to bring in numbers which don't then gel with what's going on there. And that just becomes really, really it's going to screw you guys up a lot more. Just take it for what it is. It's what you're working with. It's the data set that you're working with. And so if something's going to happen based on that data set, then it's going to happen based on that data set. It's not going to happen based on you looking at some other number or whatever. You're not going to get some better indication of what may be going on. Just understand that the Fed in particular is always playing catch up, right? They're always reactive, never proactive. They use lagging data, right? So because they do that, they're always going to get in late to do anything. And then they're always going to do it longer than what they need to, but they still will. They will rarely ever follow out to their true whatever they said they're going to do. Does that make sense, guys? Yeah, don't get so bent out of shape worrying about fake numbers or whatever, because then that's all you worry about, and you can't trade, right? Remember, regardless of whatever you think about the numbers, the Fed is going to do what they're going to do based on those numbers. Period. Right? So you need to understand how those numbers play into what the Fed does and how that then translates into what's going on with everything else, right? I think it's probably the best way to explain it there. Yeah. It's easy to get, guys, it's so easy to get caught up, especially online with all the conspiracy stuff and everything else going out there. But I promise you it's not going to help you any as a trader. It's going to make it much more difficult, okay? Yeah. I used to be really, really into all that as well. And at the end of the day, I just get to the point where, man, you know what? Things are going to happen as they're going to happen. Me believing that things are, this way or that isn't going to change how things are happening. And it makes it more difficult for me to make money. So, yeah, I don't worry about that, Fiboswani says it would be all but impossible to manipulate the jobs numbers undetected. Yeah, again, guys, and here's the big thing about government conspiracies. Everybody's quick to say, oh, government this, government that. But you guys have to understand, there are tens of thousands and hundreds of thousands of people working for government in these different agencies, right? Do you really think that they can keep some conspiracy? Y'all can't even keep secrets from your partner. I mean, are you kidding me? And you think 100,000 people are going to be able to keep some big Fed conspiracy? I mean, everybody's like, oh, it was, and the moon, right? Our walk on the moon was all staged, right? You got people believe that, right? Really? You think all these people over all these decades working for NASA are able to keep this a secret? Come on, guys. The Earth is flat. It's a conspiracy by the government to make you believe it's round. Really? Billions of people in the world, and you think they can hold in that conspiracy? You see what I'm saying? No, Aeroquin, I'm telling you, man, it's not like we like a lot of people tend to make it, think it is out there with the information comes from the government. At the end of the day, guys, most of the people in government are just people like you doing their job. That's all. I mean, everybody hates the IRS. We all hate the IRS. I hate the IRS. But at the end of the day, it really is just people coming in, doing their 9 to 5 and leaving. They don't have any special, hatred towards you in particular or anything like that. They just want to go and do their job and go home. So, I mean, and it's hard to think that way because everybody, especially online and social media, is very, very, conspiratorial and whatnot, especially when it comes to government. And why? Because government's done stuff in the past, and they'll always get found out when they do it, right? But they've done stuff underhanded and hidden stuff and whatever, right? So it makes it hard to consider that, that maybe government isn't just this one big conspiracy, but there's always going to be bad actors in there, but it's always found out, right? So just thinking, right? Wait, we landed on the moon? You guys are great. JFK landed on the moon. Oh my God, what's going on? Kimasadi, good to see you, man. But yeah, I mean, yeah, exactly. Like Andrew Bennett's saying there, man. Just you just play the game, guys. Here's the thing: at the end of the day, you can either be intent on proving some conspiracy that may or may not be true, right? But that you probably will never be able to prove, right? Or you can concentrate on making money. I'm going to tell you guys, this is something I used to say a lot, guys, is that trading is about freedom, right? Freedom from money concerns and freedom from time concerns, right? That should be your goal as a trader. To be able to get to the point where you're making enough money that you don't have to trade time for money, right? And that's the way it is, because money equals freedom. Everybody's like, oh, my government is free. My God, I live here in the U.S., guys. We are not that free. Now, we've got this great story going on across the world, and we might be seemingly freer than other countries, right? But we're really not all that free. We're still really constrained by a lot of law, right? But at the end of the day, money. You guys know this because you sit there and you point out, oh, they're rich and they're going to get a slap on the hand for this bad stuff that they did, whoever it is, right? So you guys, you know this. You know money is freedom. And so if that's the case, then the goal should be to make that money so you can be truly free and not worry about all the other nonsense that you likely will never be able to prove. I'm going to tell you right now, guys, I was that way for a very long time growing up. And it's very tiring. It's very frustrating. It leads to a lot of really, really negative thoughts and whatnot because, it's like, how can everybody else be so blind and so stupid and not see it? And you get hung up on the fact that people don't get it, right? But it does nothing to help you make that money. So, yeah. I mean, just my thoughts. I know you're not trying to be argumentative, man. It is what it is, right? Like I said, at the end of the day, you either have to be concerned and worried about something that you're never going to change. I'll be honest with you, you're never going to change it, right? Whatever it is, you're not going to change it. Good, bad, or otherwise, you're not going to change it. Or you can concentrate on the thing that you can change, which is making money, doing it, getting done so that you can become freer, right? That's the way I look at it, guys. So anyway, guys, yeah. Right here, we do have this going on right now. I told you guys that this year I'm on this mission here to help 10,000 traders become much more profitable, consistently profitable, get rid of their bad patterns and things that they do, help people move beyond so that they can become successful, right? And so we are doing this right now. So for a month, and you have to go through this link here, guys. You can't go through the regular link. It's this link right here. You're going to get, this is normally $200 a month. You're going to get it for $19.99. It's 1 month. There's no auto renew. It's full access to tier 3, which, by the way, guys, I announced the Discord just yesterday. We are transitioning tier 3 into the full-on trading academy. So it's going to be Texas West Capital's Trading Academy, okay? TWC Trading Academy. And everything is going to become much more systematic, much more step-by-step, and whatnot. So you can get in there with that and be a part of that. We'd love to have you there. Our access bot for Discord is down at the moment, so it might take me, a little bit to get you, once you purchase your membership here, to get you that access. But we're doing it pretty quick here. We're usually doing it within an hour at the latest. So, but man, jump in there, take advantage of that while you can. Here's the thing. Depending on what kind of response we get to this, I may extend it 1 more month. So there is the possibility that you may be able to get 2 months at $20 a month, guys. So instead of $400, you're paying $40. And it's just the kind of stuff we got going on there, guys, is going to make you a better trader if you're willing to open your mind and pay attention and do what you need to do. Okay? You can get Elliott Wave. You're going to get Wyckoff. You're going to get price action analysis. This week, during our price action concepts training on Wednesday, I laid out my trading plan for Tesla, my local my short-term trading plan yesterday for Elliott Wave. I used that to lay out my Euro USD trading plan. So, I mean, you know, you get all this. Here's your entry. Here's why it's an entry. Here's your exit, your targets. Here's why it's a target. Here's your stop loss. Here's why that's your stop loss. And if it does something else, if it invalidates, then here's the other thing we're doing in the other direction, and here's why. You know, targets, everything else. So the idea of the weekly trainings that we do 3 times a week there is to take you from that theory to the actual application on the charts. But anyway, we would love to have you there, guys. So hopefully you'll jump on in, all right? Let me see here. Bad habits, Andrew Bennett. Yes, sir. That's what I'm talking about. Bad habits. Let me see here. Let me see. Yeah, I need to get Fiboswani to become a regular guest poster there in the in the thing there. Oh, by the way, guys, pay attention. I'm going to release one more newsletter. I've got some other ones that will be that I've kind of set up that we haven't released just yet. But make sure you guys are subscribe to those as well. But I'm gonna, guys know I've been doing these the thread a day for the month of January, right? On trading and trading psychology and tips, tricks, and techniques and all this stuff, right? If you guys haven't seen those, jump on my Twitter. They're at TX West Capital. Get in there because those threads are like gold, right? And so what I'm going to do is I'm going to have probably a once weekly tips, tricks, and techniques newsletter coming out where I'm going to delve in deeper into those threads. It really kind of flesh them out a bit for you guys. It's free. So I'm going to release that newsletter sign up later today on Twitter there. And I guess across all our most social media there. And you guys jump in on that, man. Just try. Again, my mission is what it is, guys. I'm trying to get you there. But all I can do is give you guys the information. I can't force you to do it, right? The newsletters are great. Thanks, Andrew. I appreciate that, bud. Silvio, what's up, man? Good to see you. Let's see here. He says, hello, everyone. Hello, Chris. Took along at the Euro USD chart at the Tier 3 session. And a nice gain. Yeah. So, yeah, that Euro USD play that I talked about. Big move this morning here, right? It's great stuff. So here's what we're looking. Well, I guess you know what. This is Bitcoin. Let's jump over here to the dollar first. Let me see if I can find that dollar. Let me find the right one here. So many charts. You guys have all these charts on your thing open all the time too. Sucks up all that memory. And I've got a really high-end computer here, and it just sucks it up anyway. Let's see. There we go. We'll look at this. All right. So here's what I want you to concentrate on. Look at that huge 4-hour candle, or that's a 12-hour candle right there. I'm sorry. Still got about 6 hours and 31 minutes left. Huge bearish engulfing candle, engulfing the past day and a half almost so far, right? Almost 2 days going on here. And so, yeah, I mean, this is what it is, right? Let me kind of zoom out here a bit more. There's your daily, dropping below the daily pivot, guys. We're about to cross bearishly as we fall back out of overbought here on the Stochk RSI. I mean, if we're breaking down below there, I mean, I think easily that S1 pivot becomes that next target there, right? Yeah, Andrew, the daily looks like it's not a bearish engulfing because you can see that it opened prior to the close up here. But it is, I mean, it's pretty close to it. I mean, it's this thing where, again, guys, candle structure, right? So what does this candle structure tell you? It tells you that you had some demand at the beginning really pushing, but it had no follow through. Look where it hit, guys. Previous area of resistance and support. That's where it hit. And then now we got this big bearish, candle spread on it. And yeah, so I mean, if we continue down here, S1 is the easy target. And if we're getting that, I mean, the odds are we're going to continue on down toward the S5 here, which puts us, getting down there toward the mid-90s. You said the DXY is 50 and the 200 MA are about to cross. I assume you mean a death cross, right? Yeah. Man, look at this. Look at this weekly right here that's about to close later today, guys. Look at this. I mean, we're at the bottom here, and we've got this attempt to rally, and it does nothing, right? It gets stuck again right here at this previous area of support or resistance. There's a lot of supply sitting right in here, and then more right here, right? Setting this thing back down, not able to close above the weekly. Odds are we're going to fall lower, right? And so, again, if we're doing on the weekly, the odds are we come on down to the weekly S1, which gets us, 3 handles lower or so, about 93.7, 93.8 than what we were on the daily, right? So, I mean, nothing, absolutely nothing good about this, nothing positive about this at all. It looks very, very bad for the dollar. Monthly, of course, just ugly. This month's candle fully engulfed within the previous month's candle here. Candle spread right there, right? So basically an inside bar this month, which is likely to send it lower. Yeah, I mean, there's just nothing really great about this at all. So as long as that monthly weekly pivot continues to hold as resistance, I mean, there's no reason you shouldn't be looking lower on that. And again, if the dollar's dropping off, that means people are pulling dollars out, right? Putting it elsewhere. The dollar's the safe haven. So if you're pulling dollars out of your safe haven, well, guess what? Risk on or risk off appears to be in progress, right? If it's risk off, that takes that downward pressure off of price on legacy and what do you call it? Off legacy and crypto and whatnot. So, it doesn't guarantee that they rally up, but it means it makes it a lot easier for them to do so, right? Because you have that dominant downward pressure taken off of price. Okay? Yeah, a lot of alts do look like they want to bust out the upside there, for sure. Let me see here. Wish it was Monday. I'm hesitant to open positions today. Yeah, if you're going to open a position today, guys, I think we get continuation. Usually, when you have these reports in the morning like that, the dominant position after the report becomes what happens for the rest of the day. But really, you can just wait till Monday to kind of trade, or when the market opens, next week. It's just the end of the day. So traders tend to get those positions in, during those news events or whatever, and then let them kind of play out through the day. Usually you don't have a lot of extra capital coming in as the day. As a matter of fact, as the day goes on, usually that capital dries off. People trying to, the professionals trying to leave early if they can. Last half of Fridays, guys, especially for currencies traders, is really kind of, like probably many for y'all at work, right? It's kind of like, I'm just waiting for the day to end kind of thing. I'm not really doing a whole lot. But especially more so for them because, the market's then closed for the weekend, open up later. So, yeah. Quarterly chart is quite telling on the dollar. Let me see what you're talking about here, Kimo. Zabe. Quarterly, let me see what you got. Oh, yeah. Huge bearish engulfing candle on the quarterly. Look at that. Nice catch there. You notice it found support right here at the previous area of resistance, though. You just want to see some fall through down. I mean, there's absolutely no reason not to look toward the S1 at least. And I'll tell you what, if you're losing this area here, there's little reason to think that you're not going to test way down here, right? So, or at least, 80 or something, at least. So, yeah, a lot going on in there, guys, which could give, again, and I look ahead at what, it kind of maybe like a glimpse into the future, as close as a crystal ball as maybe you can get for what the Fed may do, right? Hey, Brian, good to see you, buddy. Always good to see you checking in. Let me see here. Also on the weekly DX1 here, which isn't this one, but yeah. The DX1, by the way, guys, in case you don't know, is the dollar futures chart that you can only trade on the ICE exchange. This right here is just the DXY chart. This is not tradable, this chart. But they're pretty much exactly the same. What'd you say here? It looks to break a long-term upward support line going all the way back to May 21. Right here. Oh yeah, 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 yeah. You see it right here to right here. Coming up there should break. Yeah, looks like it wants to get rejected there, right? That line. Let me just do it. Let's get a longer time frame here. Basically, you're kind of looking at this right here, right? Something like that. Yeah. If we lose that, exactly, should be. But again, this right here is that supply block, right? Or I mean demand block. So if you're dropping through that, yeah, you should expect to come on down here toward that S1. Yeah. Let me see. We'll see how it looks here, guys. We'll see how it looks. Yeah. Dante has a good thread about slippage in Forex stop losses not protecting. Maybe another reason not to be over the weekend. Yeah, I'm really. Sometimes I'm in the weekend, guys, for Forex, but most of the time I'm not, because anything, you have a news event over the weekend, and your markets are going to react when they open back up, the next week. And there's no reason to keep yourself in a trade like that. Now, the only time I usually stay in over a weekend is if I'm really ahead in a trade, like I'm hundreds of pips or something in a bigger trade, where I've got the balance there to probably withstand any real movement. That's the only time I'll stay in, on a weekend. But other than that, I'm usually out. I'm usually out before, by midday on Friday. Every once in a while, depending on how good the trend is, I might jump in for a couple of small little trades at the end of the day. But again, usually that volume just drops off as the day hits midday and continues on. So yeah. Maybe 2023 is a green year for risk on Bitcoin too. That's my thought, man. That is my thought, Andrew. So we're gonna see, man. We're gonna see. Again, guys, those of you that were with me back here in January of 21, when we hit that low that first week, and I said it looks like that's probably the bottom, and I gave you all those reasons, including how offsides shorts were at the time, right? Everybody was short the dollar like 96% or something. It was just ridiculous. And I told you how the market, will usually really spank those who are that far offsides, right? And then I talked about how usually when it reverses, it's around the first of the year, right? And then I gave you that 114 to 115 target because that was, let me see here, I'm just going to show you. Because that was this thing here, right? Oops. Was it yearly? Was that what that was? No. Oh, I don't remember why I had it there. I've had this. It was this. Oh, it was because it was this supply cluster here. That's what it was here on the monthly. And that EQ was right there, right? And you can see we almost perfectly hit the target. And that was from back in January of 2021, right? So again, my thought is, I think we head further down. I may have to change my count some or something, but I think there's a good chance we may be topped out here and heading down lower. If we were to rally from where we're at, we're probably looking around 122, 123, right now. But for at this point, as long as we continue dropping here, it just adds more to that case that we're probably headed, mid 90s, low 90s, and then potentially even further than that. So what do we have here? Well, God, we have all this sideways, guys. Again, sideways since, most recently since around midway through December. But really, we've been consolidating here since we dropped down in here at the beginning of November, right? So we made a low, made a high, made a higher low, made a lower high, made a higher low, made a lower high, potentially making a higher low, right? So we've got a couple of months of consolidation here. So I was telling Discord last night that, man, we may be actually setting up to finally get a rally, but I am a little bit concerned because we are almost topped out on the daily Stoch RSI. Let's kind of do this here, okay? And we are sitting below the daily here, the daily pivot. But in this area here, this is resistance, as you can see here. You got 1, 2, 3, 4 touches right in this area, right? And then you have, slightly higher lows coming off here, but you've got higher lows up toward this resistance. So you've got consolidation toward this point. So we're looking for a big breakout. And so my thought is, if we're going to get that, it needs to come soon, because we are as overbought as we are here. RSI itself is basically as neutral as you can get, around 50. But again, we've talked about this before. All this inefficiency here, these big candles, that's considered an inefficiency, and price moves pretty fast through it, right? And so the idea is, if we get the pop up through the pivot here, we should be going up to the R1, maybe slightly higher here toward 18,060 or so. Up into this supply structure in this wick here. So that, if we can get impulsive breakout, that's my target. And then I'd be looking for a pullback to the pivot and then a breakout higher. If we can get that sort of movement, there's little reason for me to think we don't rally up toward the R4, R5 pivot. And doing that has gotten us, will have broken us out impulsively through that descending resistance at the same time that it hits that horizontal resistance. This right here, right? So that's significant. Right now I've got a wave 3 up here, at least around 20,963, minimum expected. Right? So we'll see if we get it. The difference between what's going on here and what happened here, obviously, is we hit here and got a big rejection. We hit here, got a big rejection. This one went down below. This one stayed within, got stuck here in this consolidation. And here we are going sideways and consolidating up toward that resistance right here, right? So there is a difference in structure here than there was here, right? Now you might be able to say, okay, well, what about this here? And it is kind of similar to this here, but this didn't actually hit the resistance, right? This did hit the resistance area. So, yes, same kind of structure that we're seeing here, right? Boom, over here, and then, sideways and then down, right? But two things. One, you have a lot more consolidation here than you did here. You have some consolidation. You had a lot more here. Two, that pullback stays within that consolidation. Here, it dropped below the consolidation, right? And then, of course, again, you didn't actually hit the resistance here, where you did hit the resistance here, and then you're moving sideways to it. So, again, none of this guarantees that we're going to get a big pop out through it, but it does set the stage for the possibility of one. Much more than what we had over in this area or anytime previously. We can look here. By the way, remember here on the weekly, remember we had the bullish divergence over a 6-month period here that led to this rally here. Now again, we're still stuck with this same weekly candle. This is a very bearish candle. It's huge. Big spike of volume, right, at the end of this rally. Generally, when we see that, we should expect a breakdown below support, follow through, right? But on the rare occasion that we don't, and instead we see price breakout higher, then this really bearish candle structure here and market structure here actually becomes very bullish, because it tells us that was all supply had. That was it. And the market said, no, sir. Market said, we're not going lower. Remember what I tell you guys, everybody comes in a lot of time, seems like everybody, right? If they're in the stock market, they think, oh, Wall Street's taking my money from me. Wall Street's screwing me out of my money, right? And then in cryptocurrency, it's, oh, the whales are stealing my money. They're manipulating the market, right? But I've told you guys time and time again, the reality of it is there's very little that some large player can do to the market if the market doesn't want them to do it. If they want to try and push it down, but the market is clearly bullish, the market says no, there's nothing they can do about it. They might get a little bit of a pushback, but that's it. The market's just going to gobble all that up and come up on it. This is what you guys have to understand. The big players, if they do it correctly, if they're understanding correctly, they know that they can't make the market do something the market is not ready to do. So everything they do is testing. Is the market ready to move up? Or is there still too much supply and it wants to go down further? That's what's going on here. This is what we teach every Monday with the Wyckoff sessions, right? It's the understanding of what's going on with your big players. How do the ranges really work? What's really going on in there? to get you out of this mindset that you're getting screwed by Wall Street and crypto whales that are just going to take your money, and understand what's actually happening. Because if you don't understand what's happening, you believe the other thing, you're going to lose money, period. There's just no two ways about it, right? Yeah, so that weekly bull div on Bitcoin, exactly. That's what we're talking about right there, right? Coming out through from the June low to the early November low, and then the slightly lower low here, mid-November, right? So now we just want to see follow through. We got a lot of room here. Really, I want to see a breakout above the weekly pivot. Impulsive breakout. Larger candle spread, spike of volume that carries us above it and keeps us above it. Again, the idea would be if we can get that, target becomes this R1 pivot area, and we should get 5 waves up there and 3 waves back to the pivot and then break out higher, right? So if we get up here, let's see here, boom. Look at this, R1 pivot, right? 50% retracement is the pivot. That's why it works, right? So yeah, so again, if we can get an impulsive breakout here, we should target the R1 pivot area, and then we should pull back toward the pivot and rally up higher. And what's going to happen is all your big, very bearish accounts are going to be scared to go long, because it's not going down where they wanted it to go, where they were where they've spent the last, June at least, last 6 to 8 months at least, telling you it was going to go, swearing to you it was going to go. Again, it may go down there, but if it doesn't, this is the psychological process that it's going through, right? And many of them have trouble flipping around them because they got so many of y'all following them, and they're scared to look like, oh, I'm waffling. You know, changing your opinion on structure, on price action structure, because new information's coming in saying you were wrong is not waffling. At the end of the day, do you want to be right, or do you want to be profitable? As a trader, you should always, always, without hesitation, without even thinking, choose to be profitable. Who cares that you were wrong? It only matters that you figured it out soon enough to get out and get in the right direction. Does that make sense? If you are not living the trading life like that, you are doing it wrong, you are going to be miserable, and you will not remain a trader for 5, 10, 20, 40, 50 years, whatever it is. You won't. Trading is about mindset more than anything else, guys. Because your mindset determines your emotional reactions or lack of, right? Don't be so caught up in you have to be right that you're not willing to be wrong. Because if you're willing to be wrong, then guess what? That means, okay, well, yeah, it looks like it may do something, and I'm ready to do it if it does. But if it doesn't, if it does something else, then this is the trade I'm taking. Again, it's that thing that we teach every week on those 3 streams we do every week for Tier 3. This is that thing that I try to get across time and time again. Don't be so married to whatever your trade is that you can't be open to the possibility it doesn't work out. And it's not enough just to be, open to that possibility it doesn't work out. You want to actually be able to figure out, okay, if it doesn't, at what point doesn't it work? And should I do something else? And what else should I do? And that way you've always got options, guys, as traders. That's what it's about. You don't have to know where it's going in a year. You have to know if it's going to move over this point locally, then where is it likely headed? If it doesn't and does this other thing past this other point, then where is it likely headed? If you can do that, you'll be perfectly fine, guys. You'll be great traders. You'll make so much money. It's stupid. But most people just have so much trouble getting to that point. Because, and I see it so much more here, even with, social media. It's just people just are scared because people are such jerks on social media. And so people are scared of being, flamed or I don't know, what they call it, ratioed or whatever, all this stupid stuff online. Who cares? You guys want to be profitable. That's the only thing that should matter as a trader, is being profitable. Okay? Fiboswani says, I still have a 30,000 possibility by the end of April on some of my timing models, so a breakout here would be nice. But cautiously optimistic. Yeah, exactly. Discipline, patience, and emotional control. It is learned over time. Yeah, it's nothing that happens overnight, guys. Listen, I tell you these things, and I know sometimes maybe it seems like I say like, oh, it's supposed to be so easy. It's not. If it were easy, everybody would be doing it, and the market would be completely a different thing. But it is not easy. It's simple. It's not easy. Just like trading, right? Simple, not easy. But you can make it easier or not as difficult. That's your goal as a trader. Let's figure out how to make it not as difficult. And the more you do it, the longer you practice these things and you do these things correctly, the less difficult it becomes. It never becomes absolutely easy, guys. Okay? Your emotions are always there. Don't let any of these other large accounts lie to you. Oh, yeah, blah, blah, whatever. They're liars. That's what it is, guys. But they tell you that because they think that's what you want to hear because you make it what you want to hear. Stop. Stop doing that, okay? So, yeah. So, we'll see what happens here, right, with these. What else do we have here? We have the Bitcoin dominance chart. What are we looking at today? So we were looking at last time, it was still consolidating here. Now we've broken down, so I think we maybe have a flat going on, maybe. Could come down a little bit further. You can see that we caught into this daily demand block right here, right at the pivot. Right now, that kind of gives us a minimum expected wave 5 of 1 target up here at around 42.73. Secondary target up around 43.38. So yeah, I mean, you know, again, the idea we've got a leading diagonal here for 1, 2, and then we've got 1, 2, 3, 4, 5 gives us 3. We get 4 here, and then we look for 5 up. The pullback. I know it's hard to see with the black here. I just try and look at it real quick while I still have eyes that can do that. 38.2% right here around the pivot. 50% at around 41.33 around that. So, I mean, still a clear, you know, wave 4 area. So, you know, looks like a flat, right? A, B, and then C coming down. So we'll see if we can get that rally now off here. Let me see here. Let's see. What's going on with Tesla here? Oh, man, look at Tesla. So Tesla, again, popped down this morning, hit that hourly S2 pivot. But that rally is like 7%, 7 or 8% this morning. 3 hours coming off there, right? If we're zooming out here a bit more, look how big that candle is on the 4 hour there. But again, so we do have this this bullish divergence coming up here, right? See a lot of the same volume here. It's trying to push down, but you know, demand is still catching up with it, right? What are we looking at here? See, again, bullish divergence forming here. 12 hour get to break out. You know, this could be like a 1, 2, 3, 4, 5. So like an ending diagonal could be here, right? Daily, again, doing the same thing, right? If we do break down further, you know, we'll continue to look at that daily S1 pivot, which gets us closer toward that 88 target, right? But if we can break out above this swing high here at 124.48, we should be looking to target this pivot area up here around 142. If we can get an impulsive breakout above that daily pivot, well, again, at that point, then we look at this kind of this area right here, which just happens to be that R1 pivot. That would be our next target. You know, everybody very, very bearish on Tesla, whatever, and they've been for a while now, right? It's accelerated coming down here. Look at how volume's picked up. Capitulatory type volume coming in, right? And so usually that's what we're looking for. That's what we're looking for when we're looking for a bottom, right? We want to see volume pick up, larger candle spreads come into this slowing down area. Volume's still picked up here, but look at how small these candle spreads are here and here compared to here and here, right? Volume's all pretty much the same, but you go from this $28.82 spread to this $27.08 spread. All of a sudden, and those are both negative, right? And then going to a positive 3-cent spread here, right? 3 cents, is that what that is? No. Opened at 117.50, closed at 123.18. So 2.5, 5.5, $5.68 spread there, right? And then this one right here, which again, another small candle spread there, 118.5 to 111, so about $7 or so. But compared to, you know, this one right here and this one here, so much larger candle spreads, much smaller candle spreads, volume still up there at around the highs. So you're seeing the volume still coming in similarly, but the result is much, much less here. Even though it's popping lower, the distance between the open and the close, the candle spread, much, much smaller. This is what you need to be paying attention to, with that same volume area kind of coming in compared to what it was in this capitulatory drop there. Does that make sense? So yeah, and you notice, let me pull this back over here, high volume node right there. So we hit the 100 area. Remember, we were talking about the idea that we'd hit that, if we were dropping through the area we were at, we were looking at that 100 because the 100 is a psychological level, right? Zeros and tens number, right? Even number, all that stuff that makes it that. Last month, we saw this drop here, this huge, huge drop, right? We opened last month at 197. We closed it at 123. So that's what, $74 on that drop there, right? So $74 off that 194. I mean, that's almost half, right? 40%, something like that, 38% maybe, right? Drop on that. And so if we can find this support, I mean, you know, all of a sudden this looks pretty good. Now, you know, there's still a lot of this month to go, guys. This is the monthly chart. We're just the first weekend. So still 3 more weeks to go. Way too early to tell anything on the monthly. But that's what I'm watching. You had a spike of volume and a large candle spread on this drop. Does that signal the end of this drop? And we get a rally at least up toward this kind of, you know, 200, 210 area. That's what I'm looking for on this little bit longer term chart, right? Let's see here. Wake me up when Tesla's at 39. Another split should get it there, says Tell Your Editor. He says, don't need a split, but could happen. Yeah, so I mean, you know, again, guys, you know, on the monthly chart, I mean, you know, we're looking down here. Yeah, I mean, I'm looking down here where Fibonacci is, right? Yeah, I think, you know, yeah, you said what, 30, 39? That gets you right about here. Yeah, yeah. Though I think potentially we could see it even getting down here to around 27, or heck, beyond that, you know, that S1 pivot would be my next target right there at around 1975, right? But if we get this here, the first target, you know, on this larger time frame here becomes that pivot. If we can get an impulsive breakout above that pivot, then we're going to the R1. If we can get an impulsive breakout above that, or some kind of breakout above that, I mean, it suggests that we could see this thing going higher, and at that point we'd probably be looking up here toward, yeah, I don't know, 800, I don't know. Oh boy, oh boy, oh boy, oh boy, that hurts. Oh, all right, sorry guys. Still that rib, oh my god. At least I'm not rolling around the floor in agony, right? Oh my god. It still hurts though. 628 would be my first target if we got an impulsive breakout above the monthly pivot. 628 or so. Could potentially see it rallying all the way up here to around 800. You know, on some sort of blow off top type thing. Yeah. Sorry. I'm just trying to, man, it sucks. It sucks so bad. Okay. So yeah, you know, we'll see what happens here. Again, if it does fall lower, larger time frames, very clear targets lower, like Fibonacci's talking about there, and then I was mentioning here, definitely. But, you know, depending what happens here, there's some possibility, right? And now it could just rally up to the pivot and get rejected, and then again, we would still be looking toward that lower target. But if we can get a bounce here, we should look to target that kind of, you know, 190 to 205 kind of area, somewhere in there, getting us right up to just prior to that monthly pivot there. USD yen. This is the daily, getting a big rejection here, right? I want a long Tesla, but not before I see a clear count downwards. Yeah, there's no reason to jump into it just because, guys. Okay, that's the worst way to kind of get into a trade. You definitely want to make sure you've got some clear reasoning there that says this is a higher confidence trade, and that's the way it should be with anything. Okay, make sure you guys understand that. So man, yeah, yen, the dollar losing against the yen this morning, getting rejected here at the daily pivot. Again, should continue lower here. If we can get a breakdown through this S1 pivot area. Now, we could hit this and rally back up and reject the pivot again and then come on back down. But if we're losing this kind of, 126, 128 area, man, there's little reason to think that we won't continue on down here to 115. Probably. Now, along the way, you get a bounce probably around this 120, 122 region. But more likely than not, it'll just be a bounce. You'll continue on down toward this higher higher volume nodes area, 113, 115, as you kind of get down there. So and again, I told you I believe that this we had that 150 target and we hit that, and I think that's it. I think that's as far as it goes. I don't see a whole lot of reason for it to continue up higher. Right now we're getting a little overlap, so again, could get a bit of a rally, but I think overall we continue lower on that. As far as the weekly goes, again, better picture here. Getting rejection here at the weekly pivot. Weekly RSI does have room to fall further. Jumping out to the monthly, same idea. We kind of dipped right into this kind of demand right here. But again, if we're losing that, there's little reason not to think we won't rally. We won't drop on down to the S1 pivot at this higher volume node area. Again, that's around that 115 kind of, or 112, 113 kind of area. And I think that's a pretty good likelihood, unless we reclaim this area pretty impulsively. And then I want to see a breakout above this swing high here at 139.388. Let's see a nice impulsive breakout and close above that. If we do that, then I think, okay, maybe we could go higher here. And initially 166 or so, maybe the target I'll be looking at initially. So, that's kind of where we're sitting with that at the moment. We'll see what we can do, but the last 2 months have been really awful for the USD against the yen, right? I mean, you always talk about stairs up, elevator down, right? I mean, these are pretty big stairs, but look at that elevator. 2 months, taking out 1, 2, 3, 4, almost 5 months of movement there in 2 months, right? So yeah. Let me see here. What are the charts we got here? Sol, if we can get a breakout higher here, we're looking for this rally up toward this 1496 area, and then a breakdown to the pivot. With that impulsive breakout through that pivot on the daily, I would generally expect it to hold. So even if it pulls back here rather than popping up higher first, I think we'd be looking at it holding there and then breaking out. Now, it may hit like the resistance and pull back and then break out and then do this, but overall kind of looking for this movement of pull back to the pivot, break out through the resistance, pull back to the resistance, break out higher. I know it's not what people want to hear because they want to be, saw this, saw that because of the idiot, what's his name, SBF. But, at the end of the day, guys, come on now. It isn't, just because he was a part of it and you don't want to think it can be, that it can go up because you think it has to go down doesn't mean it has to go down, right? Right now, we did get a breakout above this multi-week resistance here. So far, that looks to be maybe a fourth wave in progress here, right? So maybe like 1, 2, 3, 4, 5 up toward this this kind of area here, maybe 33.9, but should at least reach 33.670 or so. And then again, you're going to look for that 1, 2 on the pullback, right? And 3 pop higher. So that's what I'm looking for in the Dow if we can get that. Let's see here. That's just the 1 hour time frame. 4 hours kind of curled up, nearing a cross on a bullish cross there. We are above that daily pivot, but those pivots will change. It shouldn't change much. I think the daily pivot probably runs up here to around 33,270 or so, maybe, for next week, if that high. Maybe 33,225. The hourly pivot. I think I said daily, but I meant hourly. 12 hours still has room to to rally higher there. Stoke RSI. Daily, we're just now hitting that daily pivot. We want to see an impulsive breakout above that. And if we can, ultimately, I think we get 1, 2, 3, 4, 5 again up here toward the R1 pivot, 34,380 toward the EQ, around 34,560, 70. And that should give us 5 waves up, 3 waves back, and then we break out higher. That would be if we can get an impulsive breakout above the daily pivot. If we can't get that and we start dropping down below this swing low right here at 32,812 or so, I think the odds are likely that we at least hit the S1 pivot and potentially further down. But short-term targets, right? Again, this is what I'm talking to you guys about. Do you understand what your trade is, right? We were looking for a breakout above here to give us this target up here. If it doesn't work out and we break down around here, well, then we know that one's not in play, and we're going to go short. Initial target here, and then potentially, lower here around 31,846.5, and we'll continue adjusting as we head down further here and trying to figure out where those other targets are. I'm not married to the idea it has to break out here and go higher. I think it will, but if it doesn't, I've already got my other trade set up ready, right? Take a small loss here, lock in much greater profits here. That's what it is. That's what it is about trading, guys. You guys got that, right? You guys understand that, right? Let me see here. Man, coin breaking my heart, man. Swept us at the lows. So I was long. Stop loss right below the low here. Got swept. Nice bit of a rally here. So I'm looking to see what goes on now. I'm looking for a new entry on coin. But yeah, I lost on that. Got swept at the low. Is what it is. Part of trading, right? So yeah, we'll see. Looks like 1, 2, 3, 4, 5 moves down. So it could be the final, dip below. Remember, this swing low over here was December 28th. So you've got potentially a local kind of swing failure pattern, bullish swing failure pattern down here. We'll have to see. No telling yet. Want to see an impulsive breakout. But see, this right here is the hourly pivot. That's going to change next week. So where's the daily pivot? Up here. Really want to see impulsive breakout, large candle spread, large volume, breakout above the pivot. If we don't get that here, guess what? We break down here. Where am I looking? S1 pivot. Easy, quick target. Right around this area, right prior to it. And then we'll go from there and see what we have. Sweep the leg, Johnny. Yeah, that's what I felt like when I saw it. I was like, really? Dang it. But, sometimes you get in a little bit early and you get stopped out. It's part of trading, guys. That's why risk management is so important. You guys, I don't think, too many people out there still understand. The holy grail is a greater than 50% strike rate, right? So more wins than losses. And your average win is greater than your average loss. If you can do both those two things, you're going to be huge. But you don't need both of those two things, right? As long as you're using proper risk management, you can still get really far ahead with like a 25% strike rate, 30% strike rate. Yeah. Because all that means is, yes, you're losing out more than you're winning, but your losses are so small because you're doing the risk management correctly, right? And when you win big. And that's all that means. And you outsize your average winner, outsizes your average loser by so much that it completely nullifies the fact that, maybe you've got a 33% strike rate. So maybe you're winning once and losing twice. But when you win, it is so much larger on average than your average loss because you're using proper risk management that it doesn't matter. You're way ahead. You continue to get ahead. You continue to move further. And so many traders still don't get that. But if you do, you do better. That's right. The better loser wins. That's right. The loser who loses less money, right? Because, you take two people taking the exact same trades, right? Taking the same entry, closing out the same place, but their risk management is different. One of them has a larger stop loss, the other one has a smaller one. The odds are that one with that larger stop loss is going to be behind the one with the smaller stop loss, right? But it doesn't mean you just put a smaller stop loss in just to put one. It has to still be where it makes sense and whatnot. Because remember, your position size is dependent on your entry, your stop loss, your target, right? Too many of you guys, you just go in there, you're like, oh, I'm just going to put my money in and entry here because I think this is a good entry. We're just going to put the stop loss here because it looks like it should go here. Well, that isn't how you properly position your trade. And that's why you're losing a lot more money than you have to. You can have a less than 50% strike rate and still be immensely, immensely profitable, guys. But you gotta get clear. You gotta get right with God when it comes to your risk management. That's what it's about, man. Can I get a hallelujah or an amen? Seriously, guys, you gotta get right with your risk management. Everything else. Risk management is the core of trading. Everything else is just the fuzzy little stuff you put on top. Make it better, right? But the core of your trading is your risk management. I got an amen. I like it. Hey, Layton, always good to see you checking in, buddy. Hopefully you're doing well, man. Let me see here. Hands in the air. You guys are great. Let me see here. What's gold doing? Man, look at that gold rally. Look at that. I think we got an ending diagonal going on. We got some targets up here, 1893.10 and then 1900 kind of area, minimum expected. We've got a lot of room here on the 4-hour Stoch RSI and RSI to head up there. So yeah, still looking for that to rally up higher there. Let me see here. ADA. Whoops. Oh, let's see here. ADA doing some great stuff. Look at that, starting to break out above the daily pivot now. ADA is up. How far are we up here? So far, it's reached almost, just over 16% off the low down here on Friday, December 30th. You got big counts out there talking, oh, ADA is trash and this and that, blah, blah, blah. It doesn't matter. If you can make money, right? It doesn't matter. It doesn't matter if it's not all that useful or whatever. As long as it isn't a scam, right? Like FTX coin there, right? What was it, FTT? A lot of potential. You get this here. Guess what, guys? You should be looking for a target in this area here, and then a pullback, and then the breakout. That's if you're bullish off the bottom, that's what you're looking for. You're not looking for this. You're looking for this kind of thing. Okay? And if you can get that impulsive breakout above here, really it's this 31.5 cent area. Yeah, if you get an impulsive breakout above that, you should be good to go. I mean, you should be looking up here toward 46 cents, 45 cents locally. But increase the odds significantly that we're down here. If we're breaking out above the wave B triangle resistance here at 52.42, I think that's good to go next wave up. You don't mind making money off trash? Garage sale, my guy? That's the way it is, guys. That's the way it really is. And now, I understand there's some who won't trade, right? I won't trade. I've never... Okay. I traded BSV, I think, twice years ago. And then I just decided I hated what's-his-face so much that there's just no way I'm going to get in on that. And I understand that I lost many opportunities to trade along the way. Just, it was something I couldn't do, right? I couldn't see myself helping put money in his pocket. And that's fine, guys. But just be sure you understand that if you're not trading something, it's for reasons like that. It's not because, oh, it's a scam. I think it's a scam. I think it's trash, so I'm not going to trade it. Don't let that be the reason you don't trade it. Because you're going to miss a lot of opportunities to trade that trash. So a lot of times the trash is a lot easier to trade because so many other traders get in there and the trash makes easy moves and everybody wants to get in and make quick money, right? So it's a lot of times it's easier to exploit other traders. Guess what, guys? If you don't like what I just said about exploiting other traders, you shouldn't be a trader. It's not unethical. It's not immoral. It's silliness. We are all entering the game. The game is the trade. The game is the market. Right? You are not going to be taking much money from the professionals out there. You're going to be, at best, you're usually going to be trading with them. The money you're going to be taking, most of your money, like them, is going to be from other retail traders. If that bothers you, you don't need to be trading. If you're a trader who's losing money and that bothers you, I said that, join us at TWC. You can get in on Tier 3 right now for $19.99 for 1 month. Get in there and soak up every last drop of educational stuff we have in there. Ask questions the entire time you're there. Do something other than sit there and be upset because I said something that you didn't like. It's life. Life is funny like that. The things we don't want to hear are often things we need to hear. But we're so gosh darn upset about hearing it that it upsets us to hear it. And we get offended. How dare you? How dare I? How dare you allow that to be you? You have a choice. Oh my gosh, I'm getting kind of really... Guys, listen. I'm a nice guy. You know that, right? And there's nothing wrong with being successful as a trader. If you feel bad for the other guy because he lost on that trade, then there's just no way you can be a trader, guys. It's like having a business, right? And let's say your point to be profitable, where you can pay your bills, pay your supplies, all this kind of stuff, pay your employees and all that, is $50 on XYZ object, right? And your competitor is selling it at $40, right? Well, no. Let's say you could sell it at 40 and just kind of break even, right? And your competitor's selling at 40, but you won't sell it at 40, or at 40, right? You're going to sell it a little bit lower because you feel bad that the other person coming to buy it is spending money to buy it. What are you doing? What are you doing? All life for all of us, guys, is about making decisions about where we want to spend our money. There is no shortage of dollars out there, guys. There is no shortage of money. You just have to figure out what is more important for you to spend your money. That's all. In trading, you know what? If somebody's going to their trading, they're losing consistently and they're not doing anything about it, learning how to be a better trader, learning how to do proper risk management, all these things, then that's on them. That's not on you. They entered the market. You got to be 18 years old to get in the market. You're a big boy, big girl. You're an adult. Time to set up, to step up, to be an adult. Stop, expecting the world to give you. The world isn't going to give you anything but a hard time. How you deal with that hard time it gives you is what defines whether you're going to be successful in life and in trading. Okay? And look, Fiboswani even says another great thing here. How do you know if the other person lost or not? You have no idea. You don't know their book. Oftentimes, that's such a great point. I used to point this out all the time, right? When you go to a trade, just because you're buying and it goes up and you make money and the other person's sold, right? Because there has to be a seller, right? Doesn't mean that they lost money. They were holding potentially from lower. They could have made a lot larger profit than you're going to make. If they're doing it right, then they hit their target and they're happy. They've done what they needed to do. That's it, right? So, but a lot of your bigger accounts out there, they don't understand. They are not really traders, guys. They're just like you. But they're acting like they are. And so they talk about nonsense like that. Like, oh, it's a zero-sum game. There's a winner and there's a loser. My ass. Sorry. I get so frustrated when I hear people talking about that nonsense because it's not true. Sometimes it's true. Sometimes there's a winner and a loser. But even if you lose money on a trade, if you're following your trading system, which is over time, successful, then even that loss isn't really a loss because your system works. You see what I'm saying? And I bring this up because I had a few people ask me about this week. Just because there's a trade there doesn't mean you're taking money from somebody. And even if you are, so what? If they're choosing to be in this market and they're not doing it correctly and they're choosing not to do it correctly, that's on them. You have no responsibility to that other person. That doesn't make you a terrible person. Society has you thinking that as long as everybody else is out there, if somebody stumbles, you have to absolutely feel responsible for that, and you have to absolutely do everything you can to help them, even if they don't want to be helped, because most people don't want to be helped. There's the reality of it, guys. I tell you this stuff because these are the things that I had to learn to become successful, not just as a trader, but in life. I could not be where I am today if I did not learn these things. If I let society continue to tell me how I had to tone down my greatness, my ability to do the things that I could do, my desire, my ethic, my work ethic. I had to tone it back for somebody else. No, I don't. And you don't either. Stop letting society tell you. And if you're in society telling that, stop. You're part of the problem. Stop. Life is going to go so much easier for you if you stop the nonsense. Oh my gosh, this has turned into a sermon. I'm so sorry, guys. Today's show feels like church. Man, I apologize. Seriously. It is. I'm so passionate, guys, about being successful and about helping others be successful, because everything you kind of come into in life tries to keep you from doing that. They try to make you responsible for everybody else's decisions. They try to make you feel bad because you busted your butt and worked so many hours and so hard and did so much school and or whatever it took for you to get where you're at. And they want you to feel bad about it. I'm so sick of hearing that. I say congratulations to you. You've been amazing. Keep it up. Keep it up. Don't slow down. Do it even better. Because at the end of the day, the only person that cares about you and your family is you. Your government doesn't care. Society doesn't care. They act like they do. They don't. They just want to feel morally superior to you. That's all. All right, guys. Oh, okay, guys. Let me see here. Tell your writer says retail wants you to think they're investing, and if they lose money, then someone took advantage of them. Obviously, yeah. Investing in quotes, yeah, exactly. So yeah, again, what were we saying here, Leighton? Talking of FTX, I watched the Madoff documentary on Netflix last night. The similarities are uncanny. Highly recommended. It's a great show. Yeah, watch it, guys. Watch it. Yeah, it really is. Especially if you don't really know a whole lot of the Madoff story. It's a real quick, easy way to kind of get into it. It kind of keeps you there, I think, for sure. It's not Serenity now, Seinfeld. I'm not sure I'm going to say your name right here. X-Racken, is that what you're saying? Moral grandstanding is a disease of social media. You see it a lot on Twitter, Reddit. Yeah. Guys, you know how I feel about social media. I mean, I'm on it because for business, it's where we need to be. It's how I can reach you guys, right? But I really feel like in general, social media tends to be a cesspool more than anything else. There's a couple of good pockets throughout it, but just in general, it like X-Recken there said, it's this. It just all these things that society does and says that are, like I was just saying there, it just makes it even worse. It makes it even stronger. And no wonder people are so upset and confused today. No wonder our current generation is confused. They're without direction. They are, and it's sad because it's on us as society for what we've done. Now we can choose to change, or we can choose to continue to be a part of that problem, right? So yeah, you agree with that? A cesspool as you sit there hacked, right? Yeah, you see YouTube everywhere. You guys got it. See, that's why you guys keep coming back, because you kind of, I think you understand where I'm coming from. And it's hard to find people that feel that same way, or at least that are public about it, because everybody's so scared of turning everybody else off. Business depends on new clients, new customers, right? Oh, I don't want to say something too aggressive because I don't want to lose my business. Man, I'm just a firm believer that if you say the truth, if you speak truthfully, you're going to bring to you those that are interested, right? And if those that aren't, well, they aren't. And they probably wouldn't be good for your business anyway. Just because somebody wants to come to TWC, just because they come and join, doesn't mean they're going to take advantage of it and listen and understand. We've got a great history. We've got a great, lot of people that continue to stick with us. A lot of people have been with us a long time and eventually moved on. But we have so many people that stick with us, and it's because it is what it is, right? I mean, I'm not going to sit here and sugarcoat it for you guys, because how am I helping you? I'm not going to be exceptionally rude to you or anything, but I'm not going to not tell you the things that you need to hear, because my goal is to help you become a better, more successful trader. My goal is to help you hopefully even make your life happier. Because again, how you live your life tells you, is going to be how you trade. You cannot divorce the two. It will always come back to bite you if you try. And so everything I do here, guys, whether it's here on YouTube, whether it's in the newsletter or Twitter or social media, or whether it's what we do at TWC, it's always with those two goals in mind. And, I sit there and go, okay, well, and you say, well, who are you to do it? Well, this is what I've done. This is what's worked. This is when I went through these same things. I was the same person you are a long time ago. And I figured out how to overcome that. I figured out what it took to get to where I'm at today. So I can help you, I can show you, I can teach you, I can tell you how to do it. You just have to be honest and open enough to accept that and to listen and to think about it and to really consider it. I can't force you to do those things that you need to do to get where I've gotten. Doesn't mean you want to make millions of dollars a year. Maybe you don't. That's okay. But being successful and happy in life, it does take a change in the way that you view life, in the way that you view the things that are happening, whether to you or around you. You absolutely have to change the way you're looking at that. Fibaswani, have a great day, buddy. You too, Andrew. But anyway, yeah. So I mean, I don't apologize for this, guys. I feel that people need to hear this. I don't feel that y'all hear it enough, and that's keeping you from being who you want to be and getting where you want to get to. I really believe that. And so hopefully that resonates. Hopefully that comes across. Again, I'll never forget way back the first year I was doing YouTube, and somebody literally said to me, the word literally, right? But they typed a comment out on the videos. They said, I can tell you really don't care about us. You just want us to come watch your channel or whatever. And I was like, wow. I mean, that was so far from the truth. And I couldn't understand what I did wrong to make them think that. They would never talk to me. I would have loved to have known. But I've never felt that way. I'll never feel that way. If I'm here spending this time with you and you're here sitting through this, then my goal is to help you in however I can. But all I can do is do what I'm doing on this end. There are two people to that transaction. You have to be open and willing to listen and consider and understand. Okay? John, what's up, man? Been a long time, still sticking around. Glad to see you still sticking around, man. But yeah, so I mean, this is, again, so markets are what they are right now. We're getting a rally off today, off that jobs data. Again, even though it came in, 10% higher than expected, it still came in, 8% below what ADP predicted. And of course, it came in much lower than what even the revised previous month was, right? So again, the deceleration continues. We saw the big hit in year-over-year pay, average hourly pay, right? Average monthly pay, stuff like that. So, month-over-month, year-over-year is what I'm trying to say. Average hourly pay, month-over-month, year-over-year. And so, we'll see what CPI says next, but, and then the PCE-PI, which comes out at the end of the month, right before the Fed meeting. But, again, the markets right now are pricing in a 70+% chance of a 25 basis point rate hike at the beginning of February, and I think that's probably right. I think that's more right than wrong. And so we'll see how it all comes out there, right? Hey, Genghis, I appreciate you, man. Michael says, got to separate the hyperbolics say anything for reaction people from the genuine people. Yeah, that's what it is. That's what it is. I'll never tell you something just to get you guys, you know, whatever, and not mean it. Everything I say, I mean. But I never mean it rude or intentionally harmfully. But many of the things that we need to hear in life are going to hurt when we hear them. They're going to hurt. And they hurt because we know they're right. Think about that, guys. Next time somebody says something to you and you feel offended and hurt by it, really consider what was just said. I bet you'll find out that it's because inside you, really deep, you know they're right. The good thing about that is you can change it, whatever it is, guys. Instead, we get so stuck on just being stubborn and not changing. Life is about change. That's the only thing that's inevitable is change, right? So why do we fight it so much? As in life, you'll be in the charts, right? In the markets. So the more you can work on all this in life, the easier you're going to find it is to trade, or the less difficult you're going to find it is to trade. All right? So there we go, guys. Like I said, I got that link up there at the beginning of the video. You guys can get in. Normally $200 a month. We are doing the $20 for the month of January. No auto renew, guys. Don't worry about, oh my God, if I go on there and I forget, I'm going to get auto renewed. You're not going to get auto renewed. But if we do get a big enough response on that, I very well may likely do it for the month of February as well. So you can get you a month of tier 3. I guarantee you we have more content that you will be able to consume in the month. But if you get in there seriously ready to learn, and by the way, that's what we're here for, guys. Tier 3 is not here for somebody that just wants to goof off and, you know, just kind of lollygag. Be serious about it. If you're serious about it, you're going to get so much out of tier 3. But don't come in if you're just looking to not be serious about it and blow your money. There's no reason. I don't need your money like that, right? I don't. That doesn't help you. It doesn't help me. But if you are serious, if you really want to learn and jump in there, that is the absolute cheapest way you can do it with us right now. Man, so even if you only do it for the month, you're going to learn so much in there that you can take with you to help you become a better trader quicker than what you would be on your own. All right, guys? All right, I hope you guys have an amazing weekend. Y'all take care, right? Remember, the only thing you control in the market is how much you lose. That's it. So just keep working on that and getting better at it. 25 plus years, guys. That's still the most important thing I do every single day. So if I'm doing that over all this time, maybe you should consider that that's the way that it needs to be, right? Hopefully you do. I want you guys to be successful. All right. We'll see y'all guys on Tuesday, whatever Tuesday is, 11 a.m. Central Standard Time. Hope to see you there. Take care.